Hello everyone, and welcome back to the channel. Today, we're taking a deep look at Nokia stock, trading under the ticker symbol NOK. We'll examine the company's financial performance, valuation, growth opportunities, analyst price targets, and whether Nokia is a buy right now. At the time of this analysis, Nokia is trading at around $9.14 per share, with a market capitalization of approximately $51 billion. Let's get started. Most people remember Nokia as a mobile phone company, but today's Nokia is very different. The company is now one of the world's leading providers of telecommunications infrastructure, 5G equipment, cloud networking solutions, optical networking systems, and data center technology. As artificial intelligence and cloud computing continue to grow, demand for high-speed networks is also increasing, creating a significant opportunity for Nokia. Let's look at some of the company's most important numbers. Stock price, $9.14. Market capitalization, $51.19 billion. Revenue, $22.45 billion. Net income, $709.88 million. Earnings per share, 15 cents. Dividend yield, 1.29%. PE ratio, 62.78. These numbers show that Nokia remains a stable business with a strong global presence. Nokia generated more than $22 billion in annual revenue. This demonstrates the company's ability to maintain strong relationships with telecom providers, governments, and enterprise customers around the world. However, despite impressive revenue figures, profit margins remain relatively low. Management continues to focus on improving efficiency while expanding its presence in high-growth markets. Nokia reported approximately $710 million in net income, while earnings per share came in at 15 cents. Although profitability remains positive, investors are expecting stronger growth over the coming years. The company's relatively high PE ratio suggests that the market is pricing in future earnings expansion driven by artificial intelligence, cloud computing, and advanced networking infrastructure. Income investors may also appreciate Nokia's dividend program. The company currently offers a dividend yield of around 1.29%. While the yield is not exceptionally high, it provides investors with an additional source of income while they wait for long-term growth. Now let's take a look at the technical picture. The stock appears to have strong support around the $8 level, while major resistance can be found between $10.50 and $12. If buyers continue to enter the market, Nokia could eventually move toward the $17 to $20 range over the longer term. However, investors should closely monitor broader market conditions and upcoming earnings reports. Wall Street analysts remain cautiously optimistic about Nokia. The average price target stands at $12.81, representing approximately 40% upside potential from the current price. The highest target is $20.47, while the lowest target is $6.30. This wide range suggests that analysts see both significant opportunities and potential risks ahead. Before investing, it's important to understand the risks. First, Nokia faces intense competition from major companies such as Ericsson, Huawei, and Cisco. Second, slower global economic growth could reduce spending on telecommunications infrastructure. Finally, the company's profit margins remain relatively low compared to some of its competitors. So, is Nokia stock a buy? Nokia appears to be a solid long-term investment opportunity for investors who believe in the future of artificial intelligence, cloud infrastructure, and next-generation communication networks. The company's strong revenue base, improving technology portfolio, and attractive valuation could create meaningful upside over the next several years. However, investors should remain patient because this may be a long-term growth story rather than a quick trade. Thank you for watching, and don't forget to like, subscribe, and turn on notifications for more stock market analysis videos.